Well, what's the best trading indicator for indexes? That's exactly what we're going to be talking about today at Breakout Trading Answered, the show where we talk about all things breakout trading. And of course, joining us today is Mr. Breakouts himself, Tomas Nesnidal. Welcome, Thomas.
Thank you very much, Andrew. Welcome, guys. And Mr. Breakout is ready to reveal another big secret of breakout trading today.
I love it. Thomas bringing the energy. We love it.
Yes.
That's awesome. This is going to be a great show today. I can feel it already. I can feel it in my bones. We've got a lot of highs from in the chat. G'day, Mark. Mark was the first one in the chat today. Good morning, Mark. Mills, are we live? We absolutely are live, Mills. So we could have some surprises today, sometimes technical issues, sometimes other things, but we're live here today. So welcome. I don't think I've seen your name here before, so glad you could join us. Giorgio, hey, Giorgio. I've definitely seen your name here before. Hey, Sean. And g'day, Olga. Good evening to Olga. So, there's more. G'day, Chris from Oregon. Dave. Good morning, Dave. Neil, Sean. Wow. Okay, we've got a good group here today. Now, before we get started, actually, we're trying something different today, aren't we, Thomas, to get started? As you may have noticed in the chat, there's a little poll that we're trying polls today. And the question of the day, excuse me, after I have a little cough, is what's your favorite trading indicator for indexes? We've got four options there: moving average, ADX, ATR, or other. These stink. I've got better. So let us know which one is your favorite, and we're going to reveal that a little bit later today. So, Thomas, where do we get started for today?
I'm totally ready. Let's get to it, guys, because we have a lot to cover, and I'm curious what the answer of the poll will be. Okay, so let's bring the presentation, please, and let's talk about one of two my favorite indicators for index trading. We're going to cover just one tonight, but I think it's very essential. So before we start, I have a question for you guys, and the question is, let's move to the next slide. A small test. What is it that traders most talk about except for profits? What do traders most complain about? And what do traders need to master to maximize and stabilize their income? And these three questions have one same answer. Who knows the answer? One answer. Three questions, one answer. Who knows that?
Let us know in the chat what do you think it is. And there's a little clue. It's one of the options in our poll for today, just to make it a little bit easier. So what do traders most talk about? What do traders complain about? And what do traders need to master to maximize and stabilize their income? There we go. One. G'day, one. One says volatility. Mark says vol. I assume that's volatility, not volume. Giorgio, drawdown. That's a good answer, actually. Drawdown is definitely something traders talk about and complain about, and they need to master. So position sizing. Jeff, g'day, Jeff. Volatility. Sean says position sizing. So we've got quite a few different answers there, but there is one that's leading the pack.
Yeah. Let's reveal the next slide. And it is drum rolls. Volatility. Yes, guys. Yes, volatility. Volatility, believe me, it's not drawdowns, it's not profits, it's volatility. Whenever I talk to trader, it's like, oh boy, markets are so crazy now. The volatility is through the roof. What should I do? And then the next month, oh boy, the volatility is so low. No profits to make. What should I do? And I never heard that trader saying, oh, the volatility is so normal now. Everything is working smoothly. Well, we have to have something to blame our results to, and we blame it to volatility. So we're going to talk about volatility because volatility, it is and always has been the key to trading in general, but specifically for breakout trading and specifically for index trading, that's a powerful one. That's an essential one. If you master volatility, you will see that you master pretty much everything. All right, so when we talk about volatility, we also talk about one of my two favorite indicators for trading, which is, of course, ATR, average true range. So I wonder, Andrew, how many people get it right in the poll?
So let's see in the poll now. I don't know how to put it up on the screen, so I'm just going to have to read it. But we've got moving average is 19%, ADX 6%, so ADX not so popular, ATR 44%, and other 31%. So ATR was the most favorite indicator out of the list. So it's a small list.
Yay! Good
Only
one, guys.
4
Good
options,
one.
but ATR, yeah.
Good one. So ATR, we're going to talk, of course, about ATR, but I'm going to show you something really, really neat because I'm going to show you practically how very quickly, very easily, we can utilize ATR for literally anything. I can guarantee you, you could only use ATR to create very neat, profitable breakout trading strategy without any other indicator whatsoever. So before I show you how, let's give a little bit contribution to the inventor of the ATR, average true range, who is, can we have the screen please? And it is Wales Wilder. And actually, I don't know if you know that, but the indicator is really, really old. I think 40 or even 50 years, because the book, this is a very old book called New Concepts in Technical Trading Systems. And this is the book where the ATR was introduced for the very first time by Wales Wilder. By the way, Wales Wilder, he's behind the most commonly used indicators nowadays, like RSI or many others. So he's been a phenomenal idea maker, I would say, and he brought a lot of amazing stuff to trading industry. Oh, Neil says 1978.
Wow.
Cool, Neil. Thank you. Yeah. So you see, it's soon going to be 50 years old book, and this book is some of the indicators presented there are just timeless. So thank you, Mr. Money. That's how I call him for tonight. I will not bother you with the formula. You can Google it, but this is really a timeless indicator and very, very proven with time, which is important to know. Now, how can we utilize ATR? Yes?
Is Mr. Money actually his nickname, or did you just make that up?
I made it up for this evening.
Okay. I feel very, very privileged today to have Mr. Breakout and Mr. Money. What a combination.
Oh, yes. Yes. Okay. So how can we utilize ATR? Well, surprise, surprise, surprise. Let's have a look on the next slide. And we can utilize ATR for anything. I already taught you that I'll give you examples exactly of 3 ways to utilize it. And of course, you can utilize it for entries. You can utilize it for exits, and you can utilize it for filters. So that means you literally can create strategies with ATR only. And I can guarantee you can create very neat and very good strategies with ATR only. If I would be given, like some kind of challenge, here is one indicator and create great strategies or even portfolio, I know I could achieve it with ATR because there are so many options. So let me guide you through the options. Let me show you what is the secret of ATR and how we can utilize it. Let's first talk about entries. Okay, so I've created a very simple example here to understand. Of course, this is the essence of my breakout trading. Many of you know it already. Who do not know it yet, this is based on all the breakout essence I described in the book, The Breakout Trading Revolution. So whoever is interested going deeper into breakout trading, thebreakouttradingrevolution.com, or go to the Amazon and find Breakout Trading Revolution book. But essentially, at the very core of my breakout model is pretty much always taking some what I call point of initiation and then adding or subtracting a volatility to get a breakout level, which could lead to hopefully profitable breakout trading strategy. So this is the very first use, which is just basically we take any point of initiation like today's open, which we here express as open D, plus average true range, period 20. We do not need to play with the period much, and which will give us the most current, more recent volatility. We multiply it by 2.5 times or 2 times or 3 times, doesn't really matter. You will get a positive result either way most of the time. And and we're down. We have an entry point. As you can see, this is the code. The exit will be for now just Friday exit. We will exit at the end of the day, and that's it. Now, what I would like to point out is a couple of things. So first of all, whoever is familiar with my breakout model, again, you can find it in the book Breakout Trading Revolution. I talk about average to range as the only idea for creating, calculating the space for the breakout. And I've tested a lot of ideas. I created a lot of ideas, and I tested a lot of different methods. This one with ATR still keeps being the simplest one and the best one. Second, I do not bother with the optimization of the period that much anymore. First of all, this indicator is very versatile. So if you optimize ATR, you can do it in steps of 5, 10, 15, 20, hasta up to 40, and you'll be completely fine. But you can also fix it. Pretty good periods are 5, 15, 20, 40, period. Just fix it. Try one of these 4. You'll get good results. So very simple for entries. Any questions?
Yeah, I've got a question. So have you found that, so just a little bit further on to that statement you just made about it doesn't really matter if it's 5, 10, 20, up to 40. Have you found that different bar lengths or time frames need, work better with longer periods or shorter periods, or how do you think that plays out?
That's an excellent question. I have to admit I haven't studied it in details, but just from creating thousands of strategies among different time frames, just from visual validation and cognitive skills, I have not cognitively witnessed anything that would me think about a pattern and that would lead me to deeper investigation. But maybe I should. But I could see different periods among different time frames. But there could be potentially some time frame versus period optimization.
Okay, I haven't done that research either, so I'm looking forward to you sharing the results.
Believe me, I have more important researches on my plate right now. This is a minor detail.
Yes, that's right.
This is so minor. Just guys, for you, don't even bother. This is so minor. With such as, this is just an exercise for fun. But there are better stuff to research.
Much better, yes.
Yes.
Okay. No questions in the chat yet. I think that using ATR on entries is very common approach, and I guess probably most people here on the chat today probably do that. So I'm interested to see a little bit more about the 2 other ways we can use ATR.
Okay, so next one is obviously filter, and filters are really. By the way, just have a look. Can we get one slide back now? I just want you to see for the comparison. This was before we implemented ATR filter. This is after. Okay, so you can see that using ATR as a filter, we immediately got significantly better equity curve, a lot of smoothness. And what we really utilize is the simplest, easiest way to utilize average true range for filters. And basically, all you do is you compare you compare volatility based on certain time frame or time period. And there are a couple of ways to do that. So one of the way is that, for example, is what I did here. You take 2 different periods, a shorter one, a longer one, and if the shorter one period, the volatility of it, the average range is smaller or bigger, then you have a great filter. Usually it is that you have a smaller volatility. That's the better approach. If you, for example, you take average to range 20, and the volatility of last 20 bars is smaller than last 30 bars, that can indicate that we're in a volatility decline, just a temporary short-term volatility decline, and that's a good environment, potential environment for breakouts, because that means we might be just very slightly before an explosion, which can give us a significant movement. And this concept, it's a pretty old concept that was already introduced in one of my favorite trading books ever, called Long-Term Secrets to Short-Term Trading by Larry Williams. I think it was written in 1982 or something like that. And at the very beginning, he introduces the simple concept that low volatility days are followed by high volatility days and vice versa. And he pretty much suggests that if we time our entries in low volatility in certain circumstances, it can sound a little bit counterintuitive, but it can be the most appropriate way to time your trades, because you are just in front of a volatility explosion. And that's what we do with this filter. We're pretty much trying to play volatility explosion. Now you can take rules like this and you can play them different ways. So you can try different period, or you can multiply again. So for example, a rule can be, you can take two different periods, and then the condition, you can play further with the condition, like the volatility breakout only happens if the longer one gets a volatility breakout at least 1.5 or 2 times higher than was the shorter or longer volatility range. So you just play with ideas like this. There are I would say, just with this comparison, you can create maybe up to 10 different ideas, 10 different ways to work with volatility as a filter, and all of them will do a good business, especially on indexes. I think that indexes are really, really good with this rule of volatility explosion being preceded by low volatility moments, and I think it works rather well in indexes specifically.
Yeah. As you mentioned, there's a lot of different ways you could do that filtering. So that example that you used of the ratio between longer term and shorter term volatility, is that like one of your favorites out of the 10 or 20 you mentioned?
It is definitely one of my, I don't know if very favorite, but it's one of my favorite. Quite interesting thing is that this ratio also play pretty well on volume. So what I really did, because now when you have a concept that works well on ATR, you can take the whole concept and all the ideas, and you just swap it for a different indicator. And quite surprisingly, the volume works with similar concept as well. But still, with ATR, definitely among my favorites, because there's a lot of way to utilize it profitably. And even further, you can now even combine it on different time frames. So for example, you can take your base time frame like 15 minutes, apply this rule, and then you can apply the same rule on a higher time frame like daily, and then you double play this powerful filter, and then you can progress even faster towards a better result. So again, a lot of ways to play this simple filter.
Yeah. Well, you're dropping a lot of insights today, Thomas. We're getting so many ideas here to test. So thanks for that. So we got I don't know if you wanted to mention any more about this chart, but we got a question from Son of a Gun. Welcome. Do you have stats? I assume that means stats of these strategies. Son of a Gun, if you want to clarify. But
I don't have stats. This is not a strategy. It's just a fast example. Yeah. Like this is creating strategies with average true range is so simple that I just took the first thing I had on my mind. I simply put it in TradeStation to provide some examples for this show, and I don't even feel necessities. I'm not trying to present a whole stress tested strategy here. I'm just trying to show you how it is simple to create rules which ultimately can lead to good equity curve. You need to do your testing yourself, and then of course stress test it and robustness test it as well.
Yep. And if you want to see some stats, Son of a Gun, you should go and check out the previous shows we did in this series. So we're kind of coming to the end of our what we call Index Mastery Month, and I think this is the 4th show, right, Thomas?
Yes.
Yes, that's right. It's the 4th one. And in the first 3, Thomas shows a lot of stats about different market behaviors. So I don't think I've seen your name here before. If you haven't seen those, go back and check them out. Lots of good stuff in there.
Okay. So that's the filter. And finally, we can utilize it, of course, for exits as well. And again, we can play a couple of ways, a couple of ideas with exits. But again, I think the very easiest one is just that we use ATR stop loss. So that's the last line in the yellow one, where we basically calculate, we take the last known volatility and multiply it by, again, some coefficient like 0.5 or 1. And then we transpose it into, or we express it in dollar value, which you hear in TradeStation, you do multiply by big point value syntax, and you get an adaptive stop loss, dollar-based stop loss, which is based on changing volatility. Now, again, please notice the change in the equity curve. Again, if we can go before and after, this is a massive change, guys. Like, have a look, right? Like, here is with and without, which is a massive change. So first of all, this shows us something very important, that having stop losses in indexes is quite vital. It's quite essential. I know that some traders, they claim that the best way is to trade without stop losses. That's not true. Even day trading can be extremely dangerous to trade without stop losses. Of course, sometimes without stop losses, you can see better results on the paper. I can guarantee you will not see better results in live trading, because then you will sometimes face some unexpected technical issues or other issues which can ruin your account pretty quickly without a stop loss. The positive side is that you can, again, utilize an advanced version of ATR, average true range indicator, to create stop losses like this. And simultaneously or similarly, you can create profit targets as well. So again, it's very, very easy. We can take just this one indicator and we can play all the things that we need in our strategy: entries, exits, filters, and I'm pretty sure that just with this indicator, I could create 20 to 30 different rules for entry, exit, filter, and that could be enough to create even a small portfolio on indexes. Let me repeat here, this is especially powerful for indexes. I don't know why, but indexes seem to be super well reactive to average true range. And although I do use average true range on other strategies and always in my breakout model and other markets, for some reason, indexes work so well with ATR. It's crazy how well they work with ATR.
Yep. Okay, we got some questions and comments in the chat. This one from Nate. I'll put it up on the screen. G'day, Nate. ATR is the edge of the market. Different time slices will give you some ideas. Sounds like Nate is a big fan of ATR. Question here from Eli.
Nate.
Eli asks, what's your take on Bollinger Bands?
Not a big fan of them. I use them very rarely. I couldn't find a big use for them. There are, especially for indices, indexes, there are much better indicators. This is definitely on the lower end of my scale of most favorite indicators.
I suppose
for my approach. For my approach for breakout trading can be different for min reversion, but I'm a 100% breakout trader.
Yep. I was going to say, I suppose like most indicators, it depends how you use them, right? Because there's a lot of different cases, a lot of different applications for them. So as you've shown with ATR so far, we can use it at 3 different ways. And you kind of alluded to something at your last comment there about I could just build strategies with just ATR. So it sounds like an interesting challenge for people who want to dive a bit deeper into ATR and strategies that rely on those. Question from Sean here. Let me put this one up on the screen. How about seasonality? What do you think about that?
Yeah, that's a bigger topic. I'm researching commitment of traders right now, although I have a lot of other work, so it's very slow. I don't know when I'll get it done. It's interesting. Seasonality, it's interesting. I do not need it so much because my direction is more about diversification, portfolio, system sizing, and stuff like that. But I think seasonality, especially fundamental, like commitment of traders, which is not directly seasonality, but's got a lot of common. There's a good potential in it.
Yeah. Okay, we got another question here. This one is from Tabil. What's your take on Nasdaq? I assume that's Nasdaq 100 daily and 1 hour.
Yeah, I
Nasdaq
think I think it can be a very good combination. I think if you combine Nasdaq daily and 1 hour, I think it can be a very powerful combination. I could definitely create some powerful strategies with this combination.
Yeah. All right, I think we can continue now, Thomas.
Okay, so I pretty much revealed everything I had for today, but I want to mention a couple of other points. So first of all, let's do a small conclusion.
Yep.
So just have a look. This is how we started, and this is how we did end with one indicator. And again, I want you to have a close look on this, because one of the things this picture is suggesting is that trading doesn't need to be complicated. I have strategies in my portfolio which looks very similar to this. Like, there's no complexity. There are few optimizable inputs. It's not overly complex. It's not overly complicated. It's very similar to what we just did tonight. And these strategies work especially on indexes. And you can create even a small portfolio, with strategies like this, because I believe that the best way to smooth equity curve is through small portfolio, rather than trying to stack too many techniques or filters on top of each other. Also, with this amount of different inputs and different techniques, we have a pretty big degree of freedom, meaning we're not over optimizing the strategy. We're not pushing it further than we should. So I think that's a pretty good example of what we can do with ATR. My take from ATR is that ATR is, so let's have a look on the next slide. It's highly universal. It is one of the most universal indicators out there. For example, you cannot create entry, exit, and filter so easily with other indicators like RSI. Of course you can, but you need to work maybe a little bit harder, or you have a little bit less potential and overall space of possibility. So that's what I really like about ATR, and it's very reliable. I found ATR to be very reliable. One of the most reliable indicators, never disappointed me. And I think it's essential, at least for breakout trading. Like, my breakout trading could not work at all without ATR. It's simple, essential, and reliable. What else shall we wish for, right?
That's right. What else should we wish for? Okay, so we got a comment in the chat from Nate. Applies very well here. Keep it simple. Rule applies for indices. Exactly.
Agree.
Yeah.
Yeah.
Um,
Indexes are so easy for breakout trading. The easiest markets. You just just watch the previous shows, guys. I gave a lot of clues. You can create an amazing index strategy in a couple of hours.
Yeah. Now, I've been keeping my eye on the poll here, and the numbers are changing as people add, and it's currently ATR is actually dropping. So maybe you're selling people on something else here, Thomas. It's I think it was 44 at the start, and now it's 35%, closely followed by others. These options think I've got better. I'm interested to hear from the people who chose other. What other indicator do you think's better? This could be an interesting little bit of insight. Just post it in the chat if you're happy to identify yourself, because I think that poll is anonymous. But yeah, what other indicators, if you're not using ATR, what do you think is the best one in indexes? And while that's happening, Thomas, I want to post a really nice comment here from Eli. Let me find it in the chat. This is very cool. I purchased the book. It's amazing. Gave me a nice foundation on ways to build breakout systems.
Thank you,
That's
Eli.
great.
We appreciate it. That's great. Maybe we could post the www again if anybody else would be interested.
Yep.
I put a lot of know-how into the book, and you definitely just from this simple book you can start creating profitable, high-quality strategies. So thank you, Ali. We really appreciate it.
Exactly. So, Thomas, I don't know if you want to start wrapping this up, or but we've got some comments in the chat here from my question: what other indicators do you use if you don't use ATR as your number one? I've got some good options here, actually. Sam says standard deviation. Mark, VIX, not better, but different. But yeah, that's a
good
volatility. One. Advanced decline from Sam. So Sam's a bit
that's
of a market
that's an
internals
interesting
person.
yeah. I think that's a different topic. We would probably need to address market internals separately, which we might do next year. So that's why I deliberately didn't include market internals. But that's a good one. Market internals, even VIX, which is also in market internal, these are very good. I agree. Yeah, that's a different story, but very powerful one.
Yep. And then a comment here from Nate on standard deviation lines can help you intraday as targets, which is an interesting idea. I don't think I've tested that before.
That's an interesting idea. And Nate, thank you for sharing. That's a good one.
Yep. All right, Thomas, what's next?
Okay, well, can you also quickly share the link? So we've been talking quite a lot with great feedback about the book.
Yeah, the book link is in the chat. Yep.
Yeah. So the last one, guy, is I covered one of Tomas my favorite indicators for indexes, and I just want to let you know that I will be covering deeply my second favorite one in index mastery workshop, which we're going to do in 2 weeks, less than 2 weeks. So if you want to get on the wait list and get more information, just go to this address, gobta.com/index. I'll be sharing much more things, and we will share a short video next week, but there will be also one very powerful trend indicator that I will talk about. So that was an invitation for the end. Otherwise, I hope you like this one. And that's all for today.
Excellent. Thank you very much, Thomas. So I'd like to invite everyone, if you enjoyed the show today and what Thomas has to share, then please give us a thumbs up on the video. And don't forget to hit subscribe and the bell button so you're notified whenever we release new content, which is actually at the moment we're releasing little short tips, trading tips and things from our shows in between the the live show we do every 2 weeks. So lots of great stuff coming out, but you need to make sure you subscribe and hit the bell button so that you're notified of that. Okay, Thomas. So, I mean, you shared a lot of great stuff today. Can you summarize that in 30 seconds?
Yes, ATR, entries, exits, filters. You can do it just with one indicator. That's it.
Yeah. Universal. What were the last three things? Universal, reliable, and
essential.
What was the third one? Essential. That's it. All right. So we got some thanks in the chat. So let's finish off with some thanks to Thomas for today for sharing all that great insight. Olga says thank you. Sam, thank you. Here we go from Mark. Thanks again, guys. Thank you, Mark, for turning up every show. Good to see you here. Neil, as always. Thomas Wilder.
Thomas Wilder.
That's a good one, Neil.
Yeah.
Jeff says thanks, guys. We've got a few more here, and then we'll finish up. Excellent, gentlemen. Keep up the good work. Thanks, Nate, and we appreciate all your comments Nate. And contribution in the chat. Dave's working on automation. I wish I could get my mind out of this. Keep going, Dave. You're almost there, I'm sure. Giorgio, thanks as usual. Oh, Rock's here. I didn't see your name before. Rock says thanks, y'all.
Hi, Rock.
A couple more. We've got a lot of thanks here today. Thank you, Thomas, Andrew, and ATR. Thanks, Bill. And then a couple more. Dave says this is great in terms of learning how to think about things. Yeah, absolutely, Dave. That
how to think
comment.
how to think about things. That's a nice one.
And then Chris finishes up with another great show. So thanks everyone for joining us today. Glad you could join us, and don't forget to go to that go-bta.com/indexes, which is in the chat, and we'll let you know. I think we're going to start announcing details about that next week, aren't we, Thomas? Is that right?
Yes.
Yep. Okay.
Yes,
So
that's right.
I know we've had a lot of questions about that, and it's coming. We're just working out the details. So make sure you join us next week. Thomas, do you want to tell us a little bit about next week? What are we covering? What's the topic?
Next week, we will talk about something. Well, it's the last part.
Yes.
We will be closing the Index Mastery Month. I hope you've been enjoying this Index Mastery Month. And I will cover something which I believe is the most essential, the biggest secret of index trading. And it will be a little bit of a summary, what we already went through, but I think it will be also a good opportunity to wrap it up and, highlight that this is the thing you need to understand about indexes. So I'm looking forward to it. Thank you very much for being with us, and happy trading, guys. Happy trading.
And what a big cliffhanger you just gave us there, Thomas. If you want to find out what the big index trading secret is, make sure you join us next week. Ciao.
Ciao.